If you're filing your taxes this year the same way you did last year, you could be leaving thousands of dollars on the table. This filing season has the biggest tax changes in years. New deductions that didn't exist before, a higher child tax credit, and a major change to how you receive your refund. The problem is, most people don't know these changes exist yet. Today, we're breaking down 7 new changes for the 2026 filing season so you don't miss a single dollar. 4 of these new deductions are claimed on a brand new IRS form called Schedule 1A. It didn't exist until this filing season. We'll walk through each change with the exact dollar amounts and income limits you need to know. Before we walk through each change, here's what they all have in common. Every new deduction is available whether you take the standard deduction or itemize. You don't have to choose one or the other. They also all have income phase-outs, meaning the deduction shrinks or disappears above certain income levels, and they're temporary. Most expire after the 2028 tax year. Now let's go through all 7 changes one by one. Change 1. No tax on tips. If you work in an occupation that customarily receives tips, servers, bartenders, salon workers, rideshare drivers, personal trainers, you can deduct up to $25,000 in qualified tips. The deduction phases out if your modified adjusted gross income exceeds $150,000 or $300,000 for joint filers. You'll report this on the new Schedule 1A. Change 2. No tax on overtime. If you're an hourly employee who earns overtime pay under the Fair Labor Standards Act, you can deduct the extra portion, generally the half, in time and a half. The maximum deduction is $12,500 or $25,000 for joint filers. Same income phase-out, $150,000 single, $300,000 joint. Also reported on Schedule 1A. Change 3. Car loan interest deduction. If you purchased a new vehicle assembled in the United States with a loan, you can deduct up to $10,000 in interest paid during the tax year. The vehicle must be new, not used, and have a gross vehicle weight rating under 14,000 pounds. This one has a lower income threshold. It phases out above $100,000 for single filers or $200,000 for joint filers. This is also claimed on Schedule 1A. Change 4. Senior bonus deduction. If you turned 65 before this tax year, you qualify for an additional deduction of up to $6,000 on an individual return, or up to $12,000 if both spouses are 65 or older and you file jointly. This is on top of the existing additional standard deduction that seniors already receive. The new $6,000 deduction is a separate benefit. The phase-out starts at $75,000 for individuals and $150,000 for joint filers. Change 5. Child tax credit increase. The maximum child tax credit rose to $2,200 per qualifying child under 17, up from $2,000. The refundable portion is $1,700. Income limits still apply. The credit begins phasing out at $200,000 for single filers and $400,000 for joint filers. Change 6. Standard deduction increase. The standard deduction this filing season is $15,750 for single filers, $31,500 for married filing jointly, and $23,625 for head of household. These are higher than last year, which means more of your income is shielded from taxes automatically. Change 7. Paper refund checks are going away. The IRS is phasing out paper refund checks starting this filing season. If you file without bank account information, the IRS will freeze your refund and send you a notice asking you to provide direct deposit details. You'll have 30 days to respond. If you don't, they'll eventually mail a check, but it could take 6 weeks or longer. The fastest way is direct deposit. The filing season opened January 27th. Your deadline is April 15th, 2026. If you need more time, you can file for an automatic extension. But the extension only extends your filing deadline, not your payment deadline. Any taxes owed are still due April 15th. Ready to file for free? If your adjusted gross income is $89,000 or less, you qualify for the IRS Free File Program. We made a step-by-step guide showing you exactly how to access it. Link in the description. Here are the mistakes that will cost you money this season. First, using outdated tax software. If your software hasn't been updated for this tax year, it won't include Schedule 1A, and you'll miss every new deduction without even knowing it. Update before you start. Second, assuming no tax on tips means tips aren't reported. Your tips still need to be reported as income. The deduction offsets the federal income tax, but only if you actively claim it on Schedule 1A. And here's what catches people off guard. Your tips and overtime are still subject to Social Security and Medicare payroll taxes. The deduction only applies to federal income tax. Third, filing without your bank routing and account numbers ready. Have your direct deposit information in hand before you sit down to file, not after. That's 7 changes that could put money back in your pocket this tax season. Whether you earn tips, work overtime, bought a car, or turned 65, there's likely something new on this list that applies to you. And we're not done. The One Big Beautiful Bill also raised the state and local tax deduction cap. Up next, we're going deep on the no tax on tips provision, who actually qualifies, how to claim it on Schedule 1A, and the mistakes that will cost you money. Subscribe so you don't miss it. Our free guide breaks down each deduction with eligibility requirements and step-by-step filing instructions. Download it using the link in the description and file before April 15th.
Thank you for watching GovClarity. Remember, you can find our complete guide and all official links in the More section. If you found this helpful, please like, subscribe, and share it with others who might benefit. Remember to hit the notification bell so you never miss our latest videos. We're here to make government procedures easier for you every step of the way.